Hi everybody and welcome to your TorFX market update. I'm Nathan Bray, I'll be your host. It's our Halloween special, so we will be taking a look at the weakness in the Australian property market. We'll break down the recent uptick in US GDP, but first of all, let's take a look at consumer confidence. The big news last week, of course, was consumer confidence had fallen to its lowest levels in 2 years. So now you've got over half of Americans expecting a downturn in the economy over the coming quarters. And of course, this is all while the US came out with an amazing GDP figures for the third quarter. They beat expectations by up 2.9% versus the 2.5% expected. And this is triple the previous quarterly average of just over 1% growth. So the question is, how could this be? And of course, it's great timing for the Clinton hopes in the coming election on November 8th. So the first thing that we're going to look at is an increase in inventory. So this can be like stealing from the fourth quarter GDP figures if, of course, they aren't sold. And if you look at the consumer confidence figures, you would start to suggest that is a really high probability. And again, it's just great timing for the Clinton election. The other thing that's interesting, of course, was, and probably the biggest reason, is the soybeans. So it seems to be all about soybeans, this GDP figure. So this is just a one-off increase in soybean exports due to disastrous weather in South America. And this has allowed, of course, the US to start exporting a large amount of soybeans for what will potentially be just a one-off situation. So if we were to take the soybeans out of this 2.9 figure, I think you'd still end up with an average of around 1.5% growth. So we've got really bad consumer confidence, and of course we've got a GDP sort of propped up, you would say, by a one-off event. So the information coming out isn't as positive, and of course the market certainly did react to that over the last couple of days. The other interesting point I want to raise here is some news coming out of Australia. Suggestions are that Australia may be heading for a housing crash, which of course would be very strong implications on the Aussie dollar. So there's more cranes in the sky in Brisbane, Sydney and Melbourne than the whole of North America. So that's including New York, Boston, Chicago, even all of Canada. So what we've got now is 419 cranes in the sky, which is up 313% in 3 years. This could end up with a huge glut in supply, and with foreign buyers now not being able to get their finance here from major lenders, this could have devastating effects on the housing market and, of course, the Aussie dollar, but only time will tell. That's all from me. I look forward to speaking to you all next time. This is Nathan Bray for TorFX.